Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest tonnage updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at noon and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. What if the biggest opportunity in crypto isn't the coin everyone's already talking about? Right now, 2000 XRP costs roughly the price of a mid-range laptop. But based on historical market structure, historical dominance cycles, and simple market cap mathematics, that same 2000 XRP could potentially be worth dramatically more by the end of 2026. Not because of hype, not because of fantasy predictions, and not because somebody on social media said XRP is going to 1,000 overnight, but because of something far more important: structure. Because while most investors focus on short-term price action, the larger financial system may already be moving in a completely different direction. And today, we're going to break it all down. One of the biggest mistakes people make when analyzing XRP is they immediately jump to price targets without understanding the mechanisms behind a price appreciation. Most people ask, can XRP hit $10? But that's actually the wrong question. The real question is, what would have to happen structurally for XRP to reach those levels? Because price does not move in isolation, ladies and gentlemen. Write that down. Price follows liquidity. Price follows market share. Price follows dominance, most important. Write that down. And once you understand that, the conversation changes completely and dramatically. Right now, XRP, the anointed one, is trading around $1.37. That means 2000 XRP is currently worth approximately $2,740. Not insignificant, but also not life-changing money for most people. Now, here's where it gets interesting. Despite all the attention around XRP, despite years of discussion, lawsuits, institutional partnerships, and global payment narratives, XRP currently represents only around 3.3% of the total crypto market. That's it, ladies and gentlemen. Which means even after everything that has happened, XRP is still a relatively small player in the broader crypto ecosystem. And historically, that matters enormously, because XRP has already shown the ability to command dramatically higher levels of market dominance before. In 2025, XRP dominance reached roughly 5.5%. But in 2017, XRP reached approximately 25% dominance. For a brief period, 1/4 of the entire crypto market was XRP. Think about how insane that really is. Bitcoin was still dominant. Ethereum existed. Thousands of other assets were competing for capital. And yet XRP still captured 1 out of every $4 flowing into crypto. Let that sink in, ladies and gentlemen. That's so huge. That historical precedent changes the entire conversation, because suddenly scenarios that sound crazy today start looking much less impossible. And this is where people begin misunderstanding what drives markets. Short-term noise, long-term structure. Prices reacting, systems evolving. The crypto market today sits around 2.56 trillion in total valuation. But during the previous cycle, the market reached approximately 4.2 trillion. That matters because crypto moves in cycles of expansion and contraction. Liquidity enters, speculation increases, infrastructure improves, institutions slowly become more comfortable. Then the market resets, consolidates, and prepares for another expansion phase. This has happened repeatedly across financial history. And actually, there's a fascinating historical parallel here. During the California gold rush in the mid-1800s, most people focused on the miners, but the people who often built the most sustainable wealth were the ones building infrastructure around the miners: railroads, equipment suppliers, transportation systems, financial networks. And in many ways, crypto today is experiencing something very similar. Most retail investors focus only on coins going vertical, but institutions are increasingly focused on infrastructure, settlement, tokenization, cross-border liquidity, interoperability, regulatory clarity. That distinction matters enormously for XRP, because XRP's long-term narrative has never really been about meme-driven speculation. It has always been tied to financial infrastructure, Now, whether XRP ultimately fulfills that vision remains uncertain. But structurally, that is the category it occupies. And when you analyze potential future valuations, you have to analyze them through that lens. Not emotion, not tribalism, not maximalism. Math. Simple market math. Because if you don't use simple math, you really, really go off the deep end with this. And I'm sure everyone is tired of hearing Moonboy predictions without any form of logic, because at that point, you're really not in Kansas anymore. But ladies and gentlemen, I want to start with the most conservative scenario that we're going to discuss today. Not Moonboy predictions, again, not fantasy, just reasonable historical assumptions. Imagine the total crypto market simply recovers back to its previous all-time high of 4.2 trillion. Write that down. That alone is not an outrageous assumption. Markets historically revisit prior highs over time. Now combine that with XRP regaining 5% market dominance. Write that down. Again, not unprecedented. XRP already achieved approximately 5.5 dominance in 2025. So this would actually represent XRP slightly underperforming its prior cycle peak. So let's start with the most conservative scenario. Not Moonboy predictions, not fantasy, just reasonable historical assumptions. Imagine the total crypto market simply recovers back to its previous all-time high of 4.2 trillion. That alone is not an outrageous assumption. Markets historically revisit prior highs over time. Now combine that with XRP regaining a 5% market dominance. Again, not unprecedented. XRP already achieved approximately 5.5 dominance in 2025. So this would actually represent XRP slightly underperforming its prior cycle peak. Here's what the math looks like. If the total crypto market reaches 4.2 trillion and XRP captures 5% dominance, that gives the XRP market capitalization approximately 210 billion, which would place XRP around $3.40 per XRP. That means 2,000 XRP would be worth approximately $6,779. From today's valuation of 2,740, that represents roughly a 148% return. Now pause for a moment, because this is where psychology becomes important. A lot of people in crypto have become so conditioned to hearing outrageous predictions that a 148% return almost sounds small. That's so crazy. But in traditional finance, 148% return over roughly 2 years will be considered extraordinary. I mean, you knocked it out of the park, but from what you hear all over YouTube, that would be like the biggest letdown. This is what happens when people lose perspective during speculative cycles. And importantly, this scenario does not require XRP dominating the world. It does not require banks replacing SWIFT overnight. It does not require every institution steadily adopting blockchain tomorrow morning. It simply requires crypto market recovery, XRP regaining modest historical dominance. That's it. Now, this is what most people miss. Markets often move further than expected once momentum returns. And that brings us to the next scenario. Let's move into what could be considered realistically a base case scenario. Not conservative, not euphoric, just a strong cycle expansion. Imagine the total crypto market grows to 5 trillion. Again, none of this is financial advice, just my opinion. Anyone intends any capacity. So again, entirely plausible. The market grows to 5 trillion within a multi-year expansion cycle, especially considering increasing institutional participation, ETF infrastructure, stablecoin growth, real-world asset tokenization, expanding global crypto adoption, regulatory framework slowly becoming clearer. Now pair that with XRP achieving 7% market dominance. Notice how important this distinction is. Even at 7% dominance, Bitcoin would still remain massively dominant. So this scenario does not require XRP overtaking Bitcoin. It does not require Ethereum disappearing. It simply assumes XRP becomes a more important part of the financial infrastructure conversation. Under this scenario, the 5 trillion total market cap, 7% XRP dominance, that produces a projected XRP market cap of approximately 350 billion, which translates to $5.66 per XRP. Now, suddenly, 2,000 XRP becomes worth approximately $11,329. That is over a 300% return from current levels. And psychologically, this is where investors begin paying attention differently. Because a move from 2,740 to over 11,000 starts becoming materially significant for many people. Now, does that mean it will happen? No, absolutely not. Nothing in markets is guaranteed. The only thing that's guaranteed is death and taxes. But what matters is probability ranges. And this is where long-term investing differs from gambling. You are not trying to predict the future perfectly. You are trying to position yourselves around asymmetric possibilities. And historically, asymmetric opportunities often emerge during periods when public sentiment is still uncertain. There's another historical example that actually fits here extremely well. In the early 1900s, very few people initially understood the long-term implications of electricity infrastructure. Most people viewed electricity as a novelty, expensive, experimental, unnecessary. But eventually, electricity stopped being viewed as a product and started becoming viewed as infrastructure. Let that sink in. And once infrastructure becomes embedded into systems, value creation accelerates dramatically. Again, this does not mean XRP becomes the future of everything, but it illustrates how markets reprice assets when infrastructure narratives strengthen over time. Short-term noise, long-term structure. Write that down. Let that sink in. Now let's talk about the optimistic scenario, okay? Woo! And more importantly, optimistic does not mean impossible. It simply means conditions align extremely well. Imagine total crypto market capitalization reaches $6 trillion. That would represent roughly a 50% expansion beyond the previous all-time high. Aggressive, yes. Impossible, not necessarily. Remember, global liquidity cycles matter enormously. When central bank conditions loosen, when risk appetite returns, when institutional products mature, capital flows aggressively into emerging sectors. Now combine that with XRP reaching 10% market dominance. Again, this sounds huge, enormous today, but historically, remember, XRP reached once 25% dominance, which means even this optimistic scenario would still represent XRP operating far below its historical peak dominance. And this is why historical context matters so much, because markets have short-term memories. People often assume current conditions are permanent. They are not. Under this scenario, $6 trillion total crypto market, 10% XRP dominance, that gives XRP a market capitalization of approximately $600 billion, which would imply an XRP price around $9.71 per token, meaning 2,000 XRP would be worth approximately $19,421. That is over a 600% return from today's levels. Now, immediately, some people hearing this will say, that's impossible. But here's the reality. Financial markets routinely produce outcomes that appear impossible before they happen. The internet boom, the rise of mobile technology, the emergence of trillion-dollar tech companies, the creation of Bitcoin itself. At one point, all of these ideas sounded irrational. Now, that does not mean every ambitious projection becomes reality. Far from it. Most speculative narratives fail, but investors are not rewarded for certainty. They are rewarded for identifying asymmetric risk-reward structures before consensus fully forms. And XRP remains one of the few digital assets with deep liquidity, long operational history, institutional relationships, regulatory relevance, global exchange availability, infrastructure positioning. Whether that ultimately translates into massive valuation growth remains uncertain. But structurally, that is the thesis investors are evaluating. Now, here's the critical part most people completely overlook, ladies and gentlemen. Let this sink in. XRP's future is probably less dependent on retail hype and more dependent on macro financial architecture. That's the real story that I drill into people's and clients' heads that retain us any capacity, family offices, sovereigns, hedge funds, when this subject matter comes up. Because crypto is slowly evolving from a speculative fringe market into a layered financial ecosystem. Stablecoins are growing rapidly. Tokenized assets are expanding. Cross-border payment infrastructure is evolving. Governments are actively discussing digital financial rails, and institutions increasingly care about settlement efficiency. This is where the XRP discussion becomes much bigger than simple price speculation and moonboy predictions and all kinds of disappointments that some people may believe in unicorns and gumdrops and all kinds of things. Now, there's also an important historical analogy here. The Roman road system wasn't valuable because people admired roads. It became valuable because trade, military movement, and economic coordination depended on the infrastructure. Infrastructure often appears boring at first. It's like watching paint dry on the wall until entire systems begin relying on it completely. Again, this is an analogy, not a prediction, but it helps explain why some investors continue focusing on XRP despite years of volatility, because they are not necessarily evaluating XRP as a meme asset. They're not going to get cut up like sushi. They're evaluating it as a potential liquidity infrastructure layer. Let this sink in. Now, whether that thesis succeeds remains uncertain. Competition exists. Regulatory outcomes matter. Adoption timing matters. Macro conditions matter. But this is why serious investors increasingly separate two ideas: temporary price action and long-term structural positioning. Prices reacting, systems evolving, and those are very different things, ladies and gentlemen. Now let's talk about the other side of this conversation, because balanced analysis matters. But the biggest risk to XRP is not necessarily technology. It's time, theta. Markets can remain irrational longer than people remain patient. Even strong narratives can take years to materialize, sometimes decades. And this is where many investors fail psychologically. They underestimate volatility, they underestimate uncertainty, and they overestimate speed. XRP could absolutely experience massive upside during future cycles, but could also underperform expectations for extended periods of time. That's why the true enemy in investing, ladies and gentlemen, not financial advice, just my opinion, is your mind. You must have that Gucci conviction, that Gucci clarity. Otherwise, your mind will have havoc. Your mind is a battlefield. You must be the general of your mind, not its soldier. That possibility must be acknowledged honestly, because responsible investing is just not about certainty. It's about managing probabilities and risk exposure intelligently. And this is why position sizing matters so much. For some people, 2000 XRP represents a speculative position. For others, it represents long-term conviction. Neither approach is automatically right or wrong. What matters is understanding the risk profile. Now, this is what most retail investors never fully understand. Institutions do not think emotionally. They think probability. They analyze scenarios, range outcomes, liquidity conditions, infrastructure trends, regulatory developments, and increasingly crypto markets are beginning to mature in that direction as well. To them, it's all about probabilities. That maturity may ultimately become one of the biggest drivers of the next cycle. So where does all this leave us, ladies and gentlemen? At current prices, 2000 XRP is worth around $2,740. On the conservative historical recovery model, that could potentially grow to around $6,700. Under a stronger expansion cycle, it can move above $11,000. And under aggressive but historically plausible scenario, it could approach $20,000. Not because of hype, not because unrealistic fantasy, projections, but because of market capitalization, growth, and historical dominance, recovery. Now, will any of these scenarios happen exactly this way? Of course not. Markets never move perfectly, according to models. But models matter because they help investors think rationally instead of emotionally. And in markets driven by fear and greed, rationality becomes a massive advantage. Because while most people focus only on today's candles, the larger financial system may already be slowly repositioning underneath them. Remember, short-term noise, long-term structure. Prices reacting, systems evolving. If you enjoyed this breakdown, make sure you're subscribed, hit the notification and like button, and join the Wolf Pack, because we're tracking the macro shifts, the institutional signals, and the structural changes most people overlook. Always do your own research. Never invest based solely on a YouTube video. And remember, I always say this: short-term noise, long-term structure. Pay attention to what's quiet. I'll see you in the next one. Hope everyone's having a blessed day. I want to wish a very speedy recovery to our brother Sean. Sean, your brother Josh loves you very much, wishing you to get very well and better. Hoping that you enjoyed this video and it sparks a discussion with you about XRP, Ripple, the crypto space. Get better, buddy. Everybody loves and misses you. So, ladies and gentlemen, getting back to today, what a time to be alive. From the time we released this morning's video, looks like there's going to be some form of peace now. Kumbaya. Do you know how many people got cut up like sushi? If you're watching the videos and you're timing the time it takes to watch them, dramatically different things. That's why I say the market right now is in a situation of madness and being dead in the water like a sailboat with no wind. If you're looking for a way to want to capitalize off of this market chaos, the price swings, the volatility, the assets that are ranging and wanting your hand held, do come and join the Crypto Public Desk monthly. Join over 560 active traders and investors who are taking their own financial destinies into their hand. Ladies and gentlemen, one tip from the pits can pay for your entire year subscription. In the time that these videos are produced, we've watched reversals in the DXY, in oil, in gold, in silver. I mean, you don't really need to be a rocket scientist to see this. I know most people don't know where to look for help, but if you're watching and you want to learn what we learned on the floor of the New York Mercantile Exchange, I'm 15 years old, do come and join us. But I want to go over something because one of our super fans decided today to ask a question, and I tried to answer it in the comment section. Lou, this one's for you. The world is changing right now, and there's a lot of things at odds with each other. A lot of things. I want to take a step back and try to see who wins, because the question that was asked, how can people keep buying the dip forever? And I would say you're right. The definition of insanity is doing the same thing over and over again and hoping for a different outcome. It's like the people who sit there and criticize the entire crypto space or any asset class that's not even in it. Why are you hating on something you're not involved? But getting back to Lou's question, and this is a big question, the winners and losers here right now will be people who understand a trading plan, their own recce, their own reconnaissance of what they're doing and why, and own money management. Because as narratives change today, the market perception changes today as well. You have a lot of banking families that once they've made their money, they don't want to have to make their money again. We went over in a video about the Rothschilds, Wellington, Napoleon. We went over what happens when you can influence situations and you lend money to people. Again, not financial advice, just my own opinion, retains any capacity. What we're seeing right now in the world, as far as I'm concerned, we're seeing geopolitical change, monetary change. We're seeing overall change in all 4-5 subjects that actually rule how mankind lives. When that happens, the people who have been running a system have a vested interest to try to keep running that system that way. And the people who want to change the system have a vested interest in changing the system for their own gain, society's gain, whatever reason it may be. How you survive this, what's happening is you find an amount that's comfortable, that makes sense to you to put away, invest it. Not financial advice, just my own opinion. You put that away. You DCA to a level that you feel comfortable with. You put that on cold storage, not your keys, not your crypto. Again, you hold on to that. That's like putting money away in your 401k, your Roth, your self-directed IRA. People that get ahead save money right away. They reward themselves for their investments. As adults, the toys that we buy is investing. You can only have so many boats and cars before you realize that investing is a lot funner, as far as I'm concerned. So, getting back to this, Lou. You find the amount that makes sense for you, purchase that, send it into your own crypto cold storage wallet. Now, with low leverage, remember what Jesse Livermore said, your trade size got to be so small that you can cut it, carry it, add to it, that you don't get shaken out. Speculation's an occupation, it's a profession. You got to do it every day. You got to be able to outlast the market. Not otherwise, the market will just chop you up like sushi. And you play the wider ranges. Again, not everybody can do this. If you want your hand held from this, come and join the Crypto Republic Desk monthly, and we'll show you how we do in this. So when you see all of these things moving around, the main thing right now that changes expectations of higher interest rates. When that theme hits, you look further downstream and you see that if there's higher interest rates, any asset class that does not give you any form of yield does not do as well. It just doesn't. When interest rates are zero, assets that don't yield you anything, moon. They have you rip your face off rallies. This is where you do not get shaken out. So, Lou, going back to your question, brother, who's going to benefit from this? There's too many forces at work right now that have competing interests that want to keep the status quo and want to change the status quo to really tell you this. This is where you have to not look at everyday candles. You have your trading plan, your recce. Again, we gave you the east and the west side and the tranches, the bricks, the unit. Okay? Why we love our XRP, Ripple, G Treasury. Okay? We gave you all these things. You get an amount that's good for you. It doesn't matter if it drops to 80 cents. I'm not saying it does that. Okay? But you put a little bit away that makes sense to you, that's your investment, so you don't have to worry about it every day. Then you allocate a portion of funds to be able to go in and out of the moves because the world is going to change. Do I think rates are going to go higher? No. I am bearish on metals. I told you, short term, but bullish long term, going out 12, 24 months. Because the United States has a big problem with money. It's almost mathematically to keep doing what it's doing. And the world is revolving around the U.S. Treasury system. So if the dollar crashes, the world will fall apart. And I love when people sit there and talk about certain things that I would love to have a debate with them about this, because just because if the dollar collapses, you'll see world war. Because famine will come. That's what I put in the comment sections. If there's famine and people can't feed their family, you have anarchy. So the whole system is based off of U.S. dollars and treasuries. How they keep going that forward, that's something else for another video. But at the same token, right now, the market views interest rates may be higher. Boom. Anything that doesn't do well in higher interest rates is viewed upon less favorably. So how you win right here is by having strict money management, knowing what's good for you, writing down your goals. Write your goals down, okay? Motivation, put it in front of your desk, what your monthly goals are, your quarterly goals, your yearly goals, so you can visualize what you're working for and why. Have a plan. But who's going to win this regardless? I don't think anybody has an idea what's happening. And why I say this is because the world is being ripped apart as it seems and replanted somewhere else. Regionalism is here. Globalism is dead. You can see what's happening around the world. This train has left and it's not going back to the station. So what I would say is people who are not involved in crypto, they're going to wake up one day and wish they were. Maybe they think we have tinfoil hats. One day they're going to say, I can't believe I missed all of this. One day they will look back on this. That's why we never throw any mud on anybody. I don't believe in doing that. I may differ from a lot of people. I've been in boardrooms where I basically freaked out on people back and forth and told them where the sun don't shine, but after we go get a hamburger, because it's just business. It's not personal. Finance is all business. Nothing's personal. But at the end of the day, the world is based off of commodities right now. So, Lou, I hope I answered your question. Money management, what's right for you? Because right now, I think that we're in store for a lot of rapid changes faster, and most people are not patient enough to deal with this. They just don't have the patience. People can't even watch a 30-minute video. I get it. They don't have enough time, right? But at the same token, you can't get instant gratification what's happening. There's a lot of moving pieces coming. So as the new financial world is being born, the other one's burning down. The people that benefited from the old financial system, they don't want that to burn down. They're going to do whatever they can to throw a Grimmy in the system and shame in the game to stop that because it benefits them, not us. Like I said, I don't work for retail people. Our organization does not work for retail people. We just don't. So it's hard to have these conversations with retail people. And I hope that you're understanding what I'm saying. And everyone that's part of the Wolf Pack that's here can understand the things, why I'm trying to give analogies. I joined this game at 15 years old. I might as well have been sent to be a serf to the land, a squire. But you rise to the ranks. You get that Gucci conviction, that Gucci clarity. Understand that we're the remora, and being a financial mercenary means you don't really care what other people have to say. Because we're not lemmings. We're not sheep. But at some point, you got to realize you can't have a conversation with certain types of people, because at one point, people thought the world was flat. People thought we didn't land on the moon. People think all kinds of crazy things. And the one thing the internet has done, it has allowed people to find other people, whether they believe as crazy as things that they do, to organize and find each other. It's what allowed everyone here to find me, to talk about things we talk about. But I love everybody. We make a living by what we make, a life by what we give to other people. But Sean, when you get better, brother, have a conversation with your brother Josh about all this. Have an open mind, my brother. Believe me. If you don't like what your brother's got to say after this, okay. But maybe, just maybe, it changes your perception. Because, ladies and gentlemen, change is the only thing that's constant. That's why XRP, ICP, HBAR, we go over commodities all day. If you've been paying attention to what I say on this channel for free, you'll have your trading ranges to trade gold and silver, support and resistance levels, platinum and palladium. You'll be playing sulfuric acid, nickel. I mean, I could keep going, tungsten. I mean, I could keep going through this over and over and over again. But you'll be doing it in a way that you would have futures positions. You would have spot positions, depending on how far down you want to go into the whole of financial chaos, into the whole of chaos. I love you all. I'll see you on the front lines, because this content is for informational and entertainment purposes only. Should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves that it'll never happen again, or you could be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally, because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Public. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all. I'll see you tomorrow at noon.